Welcome to Drill on Earnings. We have quarterly results up from Palantir. Everybody's excited because it seems like all is a big retail stock. People own this stock in droves in the retail sector, but this is the business story behind that stock on the move. Stock actually is not moving that much after some fantastic results. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. Palantir is certainly that, but it's a crazy stock. Forget the company. They gave us Q3 earnings that were better than estimates. So the market wanted 1.09 billion in revenues. It got 1.2 billion. Wanted 17 cents. It got 18 cents. These are a lot better than my estimates as well as the rest of Wall Street. But if we look at the business, what the business actually did, they grew revenue fantastically. Their US business growing at 77%, but their overall business growth has accelerated to 63% year over year growth. Every quarter, the company's not only growing, it's growing at a faster and faster rate, as is the profitability. Their operating margins, or EBIT margins if you want, are now at 33%. And they had a weird quarter in December. If you're watching us on, not listening to us on podcast, but watching us on YouTube or Spotify or something, you can see it from our chart. They had a weird December because they had a big stock compensation expense because the stock has gone up so much. A lot of employees taking advantage of that, and the company taking advantage of it, giving out a lot of stock. But improving margins as revenues are growing, as the pace of revenue growth is improving. So very, very interesting quarter, interesting business here. We look a little bit bigger. So these guys sell to governments and they sell to commercial. And they sell to mostly the US government, but a fast growing business outside of that, and mostly US commercial, but a business growing outside of that as well. So we mentioned the profitability increasing in this business, but when we look at their US government business, in their main business, their biggest business that was 41% of revenues in the quarter, it was at 52% on a year-over-year basis. So growing fantastically, but growing a little bit more slowly than it did last quarter. Nonetheless, they talked about some of their different innovations, particular defense innovations. A company, they did a system called Titan, a modular battlefield data platform that they built and deployed in just 90 days, they say, for forward deployment decisions for US forces there. But look, your big takeaway has got to be their US commercial growth. That business growing at 122% on a year-over-year basis. The press release said 121, but the exact math was 122. There was some rounding numbers, but I've checked this. The number is 122, 122% growth. Absolutely fantastic. Heck, it grew at 29% quarter over quarter. So spectacular growth, just short of $400 million in the quarter, as well as bigger and bigger contracts. The total contract value is at $2.8 billion now. The U.S. commercial contracts are averaging at $1.3 billion, the total of U.S. commercial value of the contracts is $1.3 billion. So that's up 342%. So businesses are looking at what the government is doing. They're maybe looking at what the stock price is doing and saying, maybe we should look at Palantir. Whatever they're doing, it's turning into contracts in the commercial sector. But their foreign business as well. And I also should mention, industrial. Industrial adoption has been really terrific for these guys. They highlighted Lear Corporation. So, Lear, of course, does a lot of things in aviation, including military aviation, but Lear expanding their foundry use to 11,000 employees using this, 175 use cases. They said they had $30 million in savings just in the first half of this year. That's what Palantir tells us about Palantir's product being used at Lear. So we'll take it with a grain of salt, but look, impressive statistics if they're anywhere near being true. And why wouldn't they be? I should also mention that as much as this company talks about its patriotic notions and it's selling to the US government, making the US war department, do you want to call it that at this point, more lethal, they saw 67% growth in their business selling to foreign governments, growing at the fastest pace they've ever grown there. And even their non-commercial business, which had been actually falling a little bit in terms of revenue production on a year-over-year basis, was up 9%. So everything growing at Palantir, US commercial growing the fastest, so is long-term contract growth. So customers, their short-term RPOs, their long-term RPOs growing faster and bigger than their short-term remaining performance obligations. Nonetheless, stock down in after-hours trading after these numbers came out, down 1%. Why? Because the stock's up perhaps 388%. That might be the reason that this has seen such an incredible increase in the valuation of the company that maybe there isn't a ton of room for the valuation to grow, even as these numbers continue to hit it out of the park. It's kind of expected at this point. I want to talk about some of the commercial business here that they're doing. They give us examples, and I think that it's really telling because we were in recent months even hearing that, I don't know, AI isn't paying off. Companies aren't really finding a lot of value in AI. They cited their artificial intelligence platform, they call it AIP, at a conference they did recently, AIPCon 8. They talked about a hospital for special surgery using Palantir software. They said it was using to cut down manual workflows from 45 minutes to 5 minutes, saving this hospital for special surgery tens of millions of dollars just by making workers more efficient. So you can see it in the sales numbers that the commercial business is really driving the growth. And that was the big success in this quarter. Here's what the always entertaining CEO Alex Karp had to say in the quarter.
Empowering the tenets of being, free and having the ability to do creative things in the battlefield context, and then taking enterprises, instead of selling them commodity parasitic software with a massive sales force, with a kind of lumbering, jargon-bearing leaders offering you steaks and dinners and other things we shall not mention, in order that you turn the value, the high value revenue of your enterprise over to them in return for these accolades. We created direct alignment with our customers. And what does that mean? It means when our customers have a unique and tribal way of doing something, whether it's underwriting or fighting or making workers even more valuable, we put an FDE, we orchestrated an ontology, we take the tribal understanding of their business, the specific nature of their business that makes them particular and valuable and lethal, and we empower that.
So that's Alex Karp, entertaining as always, excited as always. What a quarter from this company. What's what it'll mean? What's your big drill on earnings takeaway? Well, please, before I give you that number, the one number that tells you a whole lot, which I will do, follow this podcast. Subscribe to us if you're listening to us on a podcast platform, or follow us on YouTube or some of the socials. However you watch us, if we know you're out there, if you subscribe, you'll see our very latest stuff, and it'll help us know that you're out there. But Palantir Q3 earnings, here's your essential summary, your drill and earnings takeaway. A really strong quarter for this company, as the stock market expected. Just short of $1.2 billion in revenues, up 63% on a year-over-year basis. Retail shareholders maybe expected this because the stock has risen so much, over 300%, 380% in the last year, that in after hours trading, stock kind of did nothing. But Palantir is juicing that excitement, selling gear on their website, selling limited edition Alex Karp t-shirts like this one that says "Dominate," sold out on the Palantir's website. But that kind of thing is getting retail investors very excited about this company and building a fan club, and that's building up a stock growth. But the real impressive thing in this quarter was the growth in the U.S. commercial business. Commercial business growth is driving growth at this company. And the number you want to remember, the number that tells you a whole lot, the drill down earnings bite, $397 million in the quarter of U.S. commercial sales, their fastest growing business at Palantir, catching up to their fantastic defense business in the U.S. Pretty impressive stuff. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.